so many different asset classes.
What about the Shanghai Index, down 20% year to date? What about what's going on over in Europe? What about the brilliant idea on the part of the Australians to tax resource companies by 40% of their income? This is a bad idea, and I'll tell you this, that the United States is just one failed Treasury auction away from massively rising interest rates. Our whole economic rebound is dependent upon these artificially derived low interest rates, courtesy of the Federal Reserve. And I can tell you, Margaret, that cannot last forever. The monetary base continues to grow. The Fed's balance sheet continues to grow. We have the 0 to 25 basis point range on the Fed funds target rate for 17 months. When has that not failed to produce inflation? It will do so again, sending interest rates higher. And the amount of Treasury debt we're selling is unsustainable. The interest expense will put us in an extreme level of duress.
But you've been a bear here. You've been feeling fairly negative about the market for about 6 months now. So
I've been very bearish on certain parts of the economy.
You're looking smart right now, but you did miss a bit of a run.
No, I didn't. My investors own short-term treasuries and precious metals, and we're doing very well.
So you are still liking gold right now?
I am, absolutely.
On what basis? As an inflation hedge?
As an inflation hedge. Look, negative real interest rates are great for gold. And even though the dollar is looking good against the euro, measure it against gold, a real measurement of a genuine currency. That shows you the value of the dollar, and the value of the dollar is actually falling.
So how are you buying? Are you buying gold futures? Are you buying ETFs?
The PHYS, which is the Sprott Gold Trust, GLD, and also some gold stocks, too.
Is that the only sort of hard asset that you like at this point? Do you think you're fearful of what copper's telling you?
Well, yes. I think base metals are going down. Oil energy is going down, telling you that this global slowdown is coming. But I think Ben Bernanke will resume quantitative easing in the summertime, and then you got to go all in on base metals, precious metals, agriculture, and energy.
Do you think rates are moving up this summer, or you think something else is
I think rates could still go lower here for a while, but sooner or later they must price in the overwhelming supply and the inflation that's coming in the United States.
So another leg down is what you're saying. We're looking at a double dip.
A double dip recession. I'm predicting it right here. Please YouTube me and have me back when I'm correct.